Welcome back, baby. LTA, baby. Ladies and gentlemen, welcome back to the pre-FOMC meeting. It's the 17th of September. Today is probably gonna be one of the most important days of the quarter. Everyone is waiting for Uncle Jerome to arrive and release us from that choppy market behavior we've all been enjoying over the past couple of months here. Hopefully, we're going to see some large expansions taking place over the next 2 weeks or so after this particular event. I'm really looking forward to today's session. We're going to talk about the dollar. We're going to talk about some scenarios here and there here. Do take in consideration it's the FOMC. Usually around moments like these, you have to just be a little bit more cautious. That's just the reality. All right. Let me know if you're in the chat. Good to see you all. Let's get the party started. Yes, sir. Okay. We got our guys in the group all ready to rock and roll. Good to see you, Brad. Good to see you, Arun. Good to see you, Mike, Grim Reaper, CJ, Mugsy, Ryu, Adrian, Ethan, Euros, Greg, Braden, Relay, Tom, Jorn, Mr. Raven, Desmond, Rafal. Good to see you, my brother. Good to see you, Party. Hassin, shout out to you, my friend. Luton, good to see you again. Lucas, yes, sir. You guys are fully back. All right. Yes, sir. All right, let's get the party started here. First things first. All right. If you are new to this channel, we are on a mission. We are truly on a mission together here to inspire a shit ton of you guys over the next coming months ahead of us here. We're fully back with the live streams. We will be streaming here Tuesday, Wednesday, and Thursday. Maybe in the future, we will be adding one more day, one more streaming day to the party. For now, Tuesday, Wednesday, Thursday. All right, in this case right here, we're dealing with the FOMC today, which is later on. All right, I'm just going to give you some heads up. right now. We're going to go over the markets here. A couple things that I saw, by the way, directly today, still interesting overall, is gold and silver. Gold and silver. Look at that reaction. If you are familiar with our concept, you understand exactly what this means right here. Similar to gold, you know exactly what it means, okay? We're going to talk about yesterday's trade, how we got out of that trade on break even. Unfortunately, we were up 1 hour and then price came back to our entry. But after that, price came down, so it was good that we got out of our trade. Otherwise, we would have hit our stop loss. So that was a good decision. It was a very good decision here. Therefore, we're going to talk about that. We're going to talk about the dollar today as well, because it's very important to understand that right now the dollar has been tanking. I mean, the dollar has been tanking since when? January. All right. We have been coming down since January. It is now almost October. All right. Think about that. We have been coming down or trending downwards since pretty much October, but ever since April, roughly speaking, May, okay, we've been pretty much sitting in a range, in a flat range here on the dollar. So obviously, we're not dealing with macros. We're dealing with a lot of internal structure right now. We're going to talk about that. But again, we're getting some signals that might be interesting to pay attention to, especially over the next coming 2, 3, 4 weeks ahead of us here. I think that's super important for you to understand, to have a clear bias. And then we go from there. So that is the dollar, that is going to be silver, and that is going to be gold. 3 different things that we have to talk about right here. If you are familiar with the Fomc, or if you're not familiar yet, then you will be in around 5 hours and 39 minutes from now. This is going to be important. We're going to probably cut 25 base points. All right, the interest rates are coming down. What's so interesting about that is that last week, actually, the inflation data from the CPI came out higher than pretty much expected, or not expected, but at least higher than the previous month. So inflation is going up a little bit. Yet they want to cut rates. So that's going to be interesting. All right. Is that going to cause stagflation? Is this going to cause problems for the dollar? I mean, the US is in a really tough spot right now at the moment. And the main reason why is because the labor market is looking extremely weak. You guys saw the previous NFP release. You guys saw the amount of jobs added. Nasty. Absolutely nasty. Unemployment is rising. Inflation is a bit rising. And now they want to start cutting rates. That's interesting, right? We're going to talk about all these conflicts of interest right now. This is why there's so much uncertainty around the dollar. And we're going to see if we can find some clarity in that. Okay? So I'm really looking forward to that here. Xander says, I forgot how good you are with fundamentals and people keep ignoring them. We talk about fundamentals a lot here. You might have not seen that yet, but we will definitely start increasing a lot more macro fundamental data. We have specific things that we are looking at. A little bit more alternative, okay? Alternative data, we call it. It's not always going to be CPI, NFP, FOMC, unemployment claims, right? All that standard stuff. Now, we also talk about the CUT data, the positioning of institutional traders, valuation, seasonality, and of course, one other topic that we probably not even talked about that much yet, and that's called open interest. These are all the layers of the LTA framework, number 1, as you can see right here, okay? You also can get the LTA Concepts Trading War Map for free. You can download this right here. Link is in the description. Download the free ebook right now. We don't have hard copies yet for the people that are really interested in it. We got some messages. Some people really want to have the hard copy. That's coming. All right, that is coming if you wanna pay for it. If you wanna pay for it. Otherwise, download this thing for free in the description, and you know, we can go through it right here. Okay. We'll see. We'll see here. Okay, let's kick it off first with the expectation, because everyone is obsessed with interest rates. And the reason why this is important for us is because people have a certain expectation that whenever the interest rates come down, the dollar has to come down as well. All right, this is kind of the standard. Lowering the interest rates, right, should weaken the dollar. The reality is, though, that that doesn't always have to be this way, okay? And this is what we have seen last year. Last year in September, okay? 18th of September to be exact. That's exactly 1 year ago. We actually caught 50 basis points, okay? And at that time, the dollar came down for around 90 days. We were roughly here, all right? The dollar was ranging right around there. The interest rate decision came out. People expected the dollar to drop even further and becoming even weaker. But keep in mind that this is actually the start of a major rise for 10% all the way up to the top here on the dollar right there. A 10% move to the upside, okay? What happened? Well, number one, the sentiment was extremely bearish. Extremely bearish. Okay? Extremely bearish. And what do I mean with sentiment? I mean the red line that you can see here, which is called the retail sentiment, okay? We call this actually the non-reportables, okay? The retail net positioning is what we're looking at. All right, this is all built around the CUT data. If you have never studied the CUT data before, I highly recommend you to get familiar with it because this is extremely interesting on the higher time frame. We have a lot of data to prove that this is extremely relevant. Endless amounts of data is in the book as well here. If you go to the macro analysis and macro sentiment here and you go to the commitment of traders and you go to sentiment extremes, there is a lot of information explaining exactly what this data now exactly does here, okay? This has nothing to do, and this is important, it has nothing to do with candlesticks. Everything that you see here, a bullish extreme, a bearish extreme, candlesticks are irrelevant, okay? This is external data that this indicator takes, okay? And it then turns that into a kind of an oscillator, and it shows you exactly when certain market participants are extremely bullish positioned or bearish positioned, okay? It gets updated once a week, so you can only use this on the weekly time frame here, okay? These indicators are all available if you are obviously in the VIP community. But anyways, we will be talking about this a lot, and I will show you all the data regardless that we have in our group as well here. So important data on the dollar. If you go to the X Limitless currencies here, and you go to the United States dollar, and we click on this one right here, then this will pop up in our Discord, and you will see all the data that we have gathered over the last couple of, you could say, months of testing, where we can see clearly that whenever certain market participants are in an extreme, that price tends to react to that extreme kind of aggressively here. And this is by far the most reliable data. And the reason why this is the most reliable data is because it removes a lot of speculation around what will happen with interest rates, etc. I rather around these periods look at how certain market participants are positioned. And then on top of that, I'm actually curious to see which market participant is right most of the time and which market participant is wrong most of the time. And what does it tell us if they are positioned in a certain way, okay? So the red line is what we call the non-reportables. And we can kind of call them the retail traders. The reason why they call non-reportables is because they're trading with less than 100 contracts. So everything under 100 contracts is obviously usually not institutional capital, okay? Therefore, less than 100 contracts on futures means non-reportables, the smaller speculators, aka the retail traders, okay? The red line is showing you when exactly they are more bearish or more bullish position, all right? For the particular reason, I want to give you a couple of examples, then we go back to the charts, and then eventually we will talk about, you know, gold and about silver and about what we're currently seeing. But the most important data, and I just want this to be a good takeaway for you, so you can utilize this later on when the FOMC hits and you see, you know, price responding to that here, okay? So for example, here you can see that the retail is bearish positioned, okay? This is a bearish positioning here. And what happened? Price continued to drive further to the upside here. Bearish positioning, price continued to drive up here, okay? Now, bearish positioning on retail, price came down. So this was actually a invalidation, okay? Bearish positioned right here, price came up. Bearish positioned, price came up. And then this is important because this is over the last 3 years. This is the last 3 years of data here, okay? Hope you guys can see it here. Otherwise, I'm going to do it on the chart one more time. But again, bearish position here, price came up. Bearish position here, price came up. This was, and this is very important here, the FOMC 1 year ago when we cut 50 basis points, okay? This is where I want to get to. So this is all important information that we're looking at. And this data is of course on the higher time frame. It's obviously the macro. But at some moments in time, it is extremely important to pay attention to the macro because we want to see exactly what is happening from that standpoint. And that leads me to where we are right now at the moment here on the dollar, because number one, the dollar has been coming down. This week, the dollar has been coming down. We are now in what we call weekly demand. Okay, price stepped into weekly demand here. This was in 2023. Then here in July, we tapped into that weekly demand, and now we're back at that weekly demand here. So you can see that clearly over the past couple of months, we have been holding above this major zone. However, if we look at now the retail positioning, right around here, then where are we right now? Let me know in the chat, please. What can you guys see right now at the moment? Where are we from a retail perspective? Okay. This is the last time that we were in that extreme, by the way. We all saw what happened. Price came up here, but you can see that we are now bearish positioned. We are in weekly demand. The retail trader is wrong 70% of the time, according to this historical data. All right, so this is where I like to look at. I like to look at the macro fundamental data from more of a positioning standpoint, because I rely and I trust on that particular data. So if you go back to this data here, this is what we call a leading confirmation, okay? Whenever we are in an extreme, we have marked this out here from both sides, and we then say the dollar is in a macro uptrend. Bullish signal occurs when the commercials are in a bullish extreme and retail is in a bearish extreme, okay? Short-term bearish or pullbacks occur when the commercials are in a bearish extreme, retail in a bullish extreme. That's the counter macro trend, okay? So the reason why this is important is because 70% of the time, according to historical data, this has been favorable towards the upside, okay? So 30% of the time, it's not favorable to the upside. But it means that if you follow this data over time, consistently, during a certain period, you should have a 70% edge from that standpoint. I hope that makes sense. And the reason why we look at it this way, okay? That doesn't necessarily mean that I'm going to go long here. I'm going to put my stop loss under a weekly demand zone and I'm going to just take that long trade, or I'm going to short the Euro USD against the dollar. That doesn't necessarily mean exactly that here. No, this is just what we call a macro signal, okay? Macro signal comes first. After the macro signal is taken, we go to the macro technicals, we go to the intraday trend, we go to the micro execution. So it could be that we have one macro signal and we take 20, 30, 40 trades on the micro built around that one macro signal. How that makes sense? So that one macro signal can shift a trend on the higher time frame. That trend on the higher time frame can result into many lower time frame confirmations and setups. You're not going to win every single trade, but it's about the overall trend, right? Trading with the macro trend is always much more beneficial than trading against the macro trend, even when you are trading on the lower time frame. Okay? Does it make sense for you guys? Let me know. Type in LTA in the chat. And we're going to go through this data a lot more. And you will see that if you are joining me along the way over the next coming months ahead of us, I'm going to use this data a lot on different assets, also on gold, also on currencies. And you will see that when the structure shifts and we have this data that we have tested on every individual currency, and I'm not joking, we have tested this on every currency. This is the euro, right? This is the yen. This is the pound. This is the pound. You name it, we will have an edge from a macro standpoint. It's all about intraday, lower time frame confirmations using the fixed range volume profile or using volume analysis. Why? Because volume, ladies and gentlemen, volume is king. Okay? That is what we're going to do here. So anyways, that is just from a dollar standpoint. I want you to be aware of that. I want you to be aware of the fact that many people are extremely bearish positioned on the dollar. And it reminds me of last year. Okay, we are in weekly demand. We are at an extreme. Everyone expects the dollar to come down. I mean, that's all I'm saying. Okay, data doesn't lie. This is what it is. If the dollar does flip bullish here and we get a breakout, then this could be the start of a potential trend again towards the upside. But we need to wait for that confirmation, of course. So that's also another layer. We're not just trading because of macro fundamental data, because the macro fundamental data doesn't determine the timing of entries. It doesn't determine the confirmation. Okay, it's not a timing tool. It is just the understanding from a higher time frame standpoint of which market participant is usually right, which market participant has been wrong, and the backtested data can give you a real edge over time. That's it. That's interesting information for you from a daily standpoint. Now then, there is another one that I think is extremely important for you to understand, especially for today with the Fomc, and that is the following. That is what we call, let me actually guide you through that right there, the valuation, the correlation. Okay, the valuation is something that people really underestimate. Okay, the euro and the dollar usually have a certain window of opportunity, and the best way I can explain that is the following. This is also gold dollar. This is also whatever. It's pretty much everything against the dollar, or pretty much against different layers, different currencies, etc. So let's say the euro is here and the dollar is there. Okay, and this is like an elastic band. Okay, the harder you snap that band, right, the harder you pull out that band, the harder it will snap back. Okay, that is just physics. Okay, the harder you pull on an elastic band, the harder it will snap back. Okay, that's the way we look at valuation. That's the easiest way of explaining it. It's different from what people say relative strength, right? In terms of the RSI, the relative strength index, for example. In this case, it measures exactly how the dollar is positioned against the euro, okay? And how that actually has an impact on the dollar. So if we open the Stealth Valuation Index here and we click on the settings, we go to our inputs and we say, I want to measure the dollar index against the Euro USD. I'm going to click on that right there. And I'm going to then look at the undervaluation and the overvaluation. It looks similar to the RSI here, but it's actually a little bit different here. So look what happens on the daily time frame when the dollar is undervalued against the euro. Okay, when the dollar is undervalued against the euro, I'm going to set a line right here. 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 Okay, this is every time when the dollar is undervalued against the euro. Okay, what happens with the dollar? Well, in this case, the dollar goes up. In this case, the dollar goes up. In this case, you can see the dollar goes up until we're here, then we're shifting. In this case, you can see, and again, even this shorter period is how long? It's around 2 weeks. At this time, the dollar goes up right here. Right around here, dollar doesn't go up, dollar is ranging, but it's not pushing down. And this is where we are right now, okay? So we are undervalued against the dollar right here at this current moment, okay? Sorry, against the euro right now at the moment here. So it's a combination of the valuation being undervalued against the euro, and at the same time, the CUT data, the positioning of the retail trader being extremely bearish, all pointing towards potentially an undervaluation. Okay, this is indeed what we're talking about here. So I just want you to take these things in consideration. I want you to look at it. Might be something interesting to talk about here. This is something that you can read everything about in the ebook for free. It's free. You don't have to download a single thing here. You can learn about it. You can even look up all the data yourself as well if you want to. Okay, so that is that. Now this also counts for gold. okay? When people are saying that gold doesn't correlate with the dollar, people are highly mistaken, because there is definitely a correlation. We already talked about this yesterday. Like I said before, if we open a correlation coefficient here, that's an indicator, it's free, you can get that. And we go to the daily time frame, or even a 1 hour time frame. Just look at the 1 hour time frame right here. Then everything under the zero line, okay, on the dollar, everything under the zero line is what we call a negative correlation, okay? So this is what we call a negative correlation. Everything above the zero line is a positive correlation, okay? So yes, on the 1 hourly, obviously it fluctuates, but what do you guys see here? Do you guys see more often that it's negatively correlated or that it's positively correlated? Okay, let me know right here. But that's what we're seeing right there. It's obviously more or less a negative correlation here. So if there's a negative correlation, okay, and we use the index here again, the stealth valuation index, and we go to the dollar right around here, and we look at every single time when it's undervalued, you can see that right there. When gold is undervalued against the dollar, then you can kind of see that over time, every single time when we are in an undervaluation here, we tend to bottom out, okay? We tend to bottom out here. Look at that. Look at that in that uptrend here. We tend to bottom out. We tend to bottom out. We tend to bottom out. We tend to bottom out here. So this is all macro stuff, guys. This is all daily time frame, higher time frame. I'm not taking trades on the daily time frame. I'm taking trades on the 30-minute. I'm taking trades on the 50-minute. But I want you to be aware of the fact that every single time that these things give us a signal here, we're undervalued, we do see gold pushing up, or the chance that gold will push up is significantly higher. Look at that data, man. Look at that data right around there. Okay, that is indeed what we have been seeing here. So anyways, that's all macro data. This is everything that you can get access to in the VIP. All the data here, everything that we have backtested for you, so you don't have to backtest it yourself, can be done. You can backtest it yourself, but it takes a lot of time, a lot of work. We have been putting in that effort already, and we have been showing exactly all that stuff right here in our group, exactly right there, where you can see pretty much all the backtested data already for every single instrument, including gold, showcasing what I just showed you exactly right around here, when there is an undervaluation, when there is an overvaluation, and how that actually put into work. Now, the thing about this is right here, we can work with an undervaluation or overvaluation, but imagine looking at every single currency, commodity, and then looking at all the data, and then, you know, trying to figure out what's going on here. That's not gonna work, okay? I've tried it. It's extremely headache. I always will miss out on trading opportunities this way. So what did we do? We turned all these confirmations where we know by default for sure we have an edge, we have a macro edge. We turned that into an alert system right here, okay? And this is where we get all these confirmations. So right here you can say, today we got an alert. It said the euro, we saw an overvaluation against the dollar. Okay, cool. What does that mean? We click on this right here. It leads us to our backtesting, shows us the data. We now know that's our advantage right there. So I'm more leaning towards a potential pullback for the euro. Okay, that's the thought process right there. Well, that makes sense from that standpoint. This is something that we have implemented here. So all our goals here is to make it as easy as possible for you to make sure that just whenever you get involved here, you just have that full step-by-step system from a macro standpoint here, okay? Once you understand the macro, you have a macro bias. It's all about the lower time frame execution. It's all about getting involved in the lower time frame, getting into our entry models, utilizing the fixed range volume profile, and pretty much execute a bunch of trades around one signal, okay? But you need the confirmation on the lower time frame, all right? You need that confirmation on the lower time frame right here. Hope that makes sense, okay? So that is all that we have been doing here. You can join us right here, right now. It will save you a lot of time, okay? We have been working on this thing for months. We have been with our community already. All the guys are in our trading floor already, trading every single day right there. System is all you need, okay? You can talk about this, you can talk about that, but a clear step-by-step system is what really transforms pretty much the way you trade, okay? Systemizing your setup, systemizing your trading is exactly what most of you guys need in order to just fix the problem of inconsistency, okay? That is the reality. So if you're interested in that, you can click on the link in our description. You can go and apply. You can get on an application call with us, and we'll get back to you. We'll see if you're the right fit for our community, and then we'll get to work, okay? Now, I want to talk about today here because obviously we have been live trading already for the past 3 years. I mean, we took around 500 live trades on the stream. Clearly, yesterday's trade, let's go over yesterday's trade here on gold. Yesterday's trade, we were in we took a long position on the stream, right? We took a long position on the stream, which was around, I guess it was around there. Let me see. Yeah, I think we took our trade yesterday here. I still need to update. Yeah, we still need to update it. Anyways, we're going to figure it out here, okay? But anyways, we need to break above. We wanted to break above that smaller range right there. Now remember that smaller range that we saw here. We entered the long position right here. Roughly speaking right there. Price came up, okay? Price came up. I think we had our stop loss slightly below. The lows right there. At a 1R, we decided to put our stop loss on break even. We did put our stop loss on break even, and then unfortunately there was no follow through, and price came back to our entry, right? So pretty much from that moment onwards, we broke even on our trade right there. Okay, that was what we done yesterday. Unfortunately, that was the case. Now, eventually, price came down, right? So it was actually really good that we actually put our stops on break even after breaking these highs right there. And then, unfortunately, we didn't see the follow through here. Now, what did we say yesterday, right? What did we say yesterday on gold? If gold does decide to break down, because there was a possibility to do so, right, that gold would break down here, then it could be that gold would now turn that previous range right here into that resistance. Okay, so we had that range, we took that long setup, price came up, we were up on 1R, price came down to our entry, we broke even, price came down eventually, and to then we broke below that range. Remember, we broke below the range, and we said, okay, if that's the case, there is a chance that we are going to turn this range into resistance right here. Okay, the price pulled back into that resistance, and then price sold off. So that's something that we kind of expected. Now, what was happening here? Okay, what was happening here? We had a more larger range, we started to break out, we pulled back, we broke down internally, we pulled back, and this is where price now at this current moment is responding from. So it's actually kind of interesting that gold is reacting right here. We have that C, we have that E. So this is our C, this is that E, this is that R, and now potentially we are still looking at a C right here. Okay, so anyways, that is something that we were looking at yesterday. We took that long setup, price came down, price came back towards this range, and is indeed bouncing from the previous weekly value high here. Now, another one is silver. Look at silver. Do you guys see the setup right here? Let me know, please, in the chat if you guys see the setup that we have been talking about here. Look at that range, man. We have that range right around here. We have that expansion right around here. We have that pullback, and we are tapping into the fixed POC right there, right? Fixed POC right there. This is what we call the consolidation expansionary trades with continuation play. This is textbook, all right? Textbook setup once again on silver that we are pretty much looking for all the time. We're hunting for these two variations, the CME the manipulation, expansion, or the CRC, the consolidation, expansion, retracement, continuation here. So internally, obviously here on silver, we saw that range, we broke out, we pulled back, we came up, but then price reversed, price came down back towards this larger expansion. And now we're reacting bullish from this, okay? So that is something that I think is extremely important for you to, to pay attention to. So this is something that I'm willing to look at right now. So what do I want to see on silver? If we do see some volume, it would be nice if you could see some volume. There are no guarantees today with the Fomc. But what I would love to see is a reaction, a pullback towards the fixed very high here, which is this range. We broke back above that. Create somewhat of a W formation and then just simply respond from this fixed very high so that we can take a long position. And if price then holds up and it shows us some momentum here, then we can take this back towards the trade of the 42.56, something like that. Okay, I think that's the reality right there. Okay, pullback, break above, and then a potential reaction, and then a continuation play towards the upside here. So that's something I'm looking on. Okay, silver, my friends, silver. Okay, that is what we're looking at. Gold, similar for gold right now as well here. Gold already pushed up a little bit too aggressively. So if gold is coming down here, yeah, it will probably take more time for gold to come back towards the exact level that we're looking at, and then we'll see from there. Okay, so it might be that I'm going to start looking at silver today and not particularly gold. Okay, there is a chance that if silver pulls back, that seems to be the better option for now. Let me know. Dr. says was break even for me after 1 to 1R. System is on point. Vanessa, our work process, establish bias by CVT data, check macro technical confirmation, map the micro scenario, apply appropriate risk management. That's exactly what it is. It is macro fundamentals, the macro technicals. Okay. Let's go back to our book here. Macro fundamentals, macro technicals. Intraday trend. Doesn't have to be always an intraday trend, by the way. It can also, we'll talk about this a lot more later on. But that means pretty much the previous weekly trading range. Okay, that's something that we talk about a lot. And then we have, of course, the micro technicals, right? This is where volume comes into play, right? So let's see if silver can pull back, and then we'll see if we can execute a position again. That's it. I think that's the best way to look at it for today. I don't want to stay. I want to really stay out of the currencies. I think the dollar and the currencies right now are really. I've seen a lot of mixed data, mixed emotions here. We're gonna stick with the commodities today. That's it. Brad says, took me months doing 4 hours a day and never got this much detail. Amazing. Amazing, my friend. Yeah, Brad, it's really good to have you in our group, my man. Honestly, it's really good to have you in our community. We have been already crushing it for a while now. Yeah, man. It's time to step up. And, absolutely crush it. Good to have you here, my friend. Really good to have you here. So this is why I'm here, right? Even on days where the market tends to be a little bit slower, okay? when, you know, we're waiting for the FOMC to come out and all that stuff here. I'm still here. I still want you guys to win. I still want to at least give you at least some data, some things that we talked about here, while we're still waiting for some silver play potentially. But the most important part is that we are on a mission right now at the moment to just be consistent, show you over and over again how we work together, how we follow that same exact process every single day. If there is a setup, there is a setup. If there is no setup, there is no setup. But the system itself doesn't change, okay? The system itself doesn't change. Tim says oil is looking similar to gold and silver. Yeah, the reason why oil is pushing up, I think it has all to do with the dollar right now. Okay? I think it all has to do with the dollar. Mr. Op, you use the volume profile. Why don't you use the footprint as well? You don't understand anything about liquidity. Liquidity only makes sense if you use key levels instead of POC, value area low, footprint. I mean, this guy's obviously new. You can't blame him. Yeah, this guy has no idea what we have been doing, so yeah. Thank you for the energy. Liam said the patience you have, Lorenzo, is underrated. Cheers, my friend. Well, the number one thing that I've learned is to know when to trade and when to stay out of the market. To be really honest with you, I've still been trading a lot more in general than I initially wanted here. So sometimes I do. I have to be honest here, okay? Sometimes there are periods where I'm like still looking for the trade just because, right? It's just something that I'm still working on every single month. Every single day I'm trying to be more specific. But every month I see that every time I'm, you know, I can kind of, I'm building that self-awareness, right? Knowing, okay, this is a typical, I know now when the dollar is here, it's better to just, you know, be more of an observer this time. It's something that I'm definitely working on all the time still. It's avoiding trading days pretty much. That's it. Trying not to trade too much at this current moment here. Okay. Also in the last 30 days on this account, we have been up 6.7, 58% win rate, 2.2 average risk-reward ratio, 73 minute average win duration, which is significantly longer than usual. Significantly longer than usual. That has to do with the market, for sure. Well, I'm actually freaking surprised with how hard silver is pushing here. Pre-FOMC. Honestly, that's a crazy push from silver. Didn't expect that, to be honest. At least on this hourly candle, I expected at least a little bit of a pullback here. I think we opened the hourly candle and we just came up right away. Yo, what's up, Lorenzo? Yesterday you talked about the New Zealand dollar against the yen, including cross pairs in your Telegram. That's actually correct. Yes, we will be adding cross pairs right now. Okay. Prince, miss you, bro. Long time no see. I don't know if you remember me, but I'm one of your first subscribers, and I'm the one always asking you to give us a home tour. Oh, you're that guy. Holy shit. I do remember the home tour questions. Yes, sir. Yeah, good to see you, my friend. Good to see you. Damn, that's been a long time. That's been a long time. Okay. Yeah, also gold, by the way. Gold is also pushing up aggressively. We are dealing with a previous range, guys, so do take that in consideration right now. Gold is going to reach this level right now at the moment here. This is the fixed POC of this larger range. We also have this on gold right here. If you take the whole or complete range, gold's going to have a hard time right now. It has to be. I would be very surprised, to be honest, if this would break out. But hey, anything is possible. But I just would be very surprised if this would break out right away. Yeah. If it will break out, though, it will be very interesting. Because if that's the case, you do have, you know, that larger breakout. And then it's trying to get back higher. I mean, that's just what we're seeing here. But then we need that confirmation. We need that closure above this level, giving us that confirmation. That's it for gold right there. Top 5 trading says, I noticed the price of gold, and gold is different. So I plotted the previous weekly POC and I plotted the exact price on the CFD, giving me a clear break and retest model to sell gold. Yeah, anyways, the yesterday's sell, if we talk about gold sells, extremely cautious with gold sells regardless in the macro uptrend. But, you know, in this case, you can see that the moment we broke below that range, we literally retested this zone right here, built around this range. And a lot of people tend to ignore previous ranges, right? They just simply look at order blocks or fair value gaps or whatever the case may be. And they don't really look at previous ranges that have been created. And all of these ranges that you see right here, all of these ranges are containing a lot of information, okay? A lot of information, a lot of data, a lot of trades have been executed in that range. And this is why I utilize the ranges. Doesn't matter if you break below it. Even if you break below it, I can still use that as somewhat of a confirmation here. So the moment we started to see that rejection, right here, I can actually zoom in a little bit. The moment we start to see that rejection right at the fixed very high, then this might be still a tricky short position. But then the moment you closed below the fixed very low, that is kind of the moment where you could say, okay, now we have closed below here. Now you can like look for that entry confirmation. And now you can place your stop loss above the highs. And now you look for the continuation towards the downside, for example. In this case, something like this. Now, price came up. But yeah, that's something I would look at. But anyways, it's still gold. We're in a major uptrend. Gold just is pulling back a little bit right now at the moment. And we're still dealing with a much larger range right here. Okay, so this is by default going to be the most interesting zone for us when we pull back into that, for sure. All right, this is how gold runs. This is gold's ultimate way of moving. It's the range breaks, pullbacks, continuations. Look at this beautiful reaction here. Right, just look at this reaction that you see on gold here. Right, we range, we break out, we pull back into the range, we come back to the area where the most volume in that range has been traded. Right there, and we come up. Like we shoot through the upside right there. And at other times, you see something different, right? You see a range, price manipulates first, it pulls back. Some people would go short here, they get stopped out, but price breaks above it. Then you turn that range into the fixed POC right there. And then from that moment onwards, because you're in a macro uptrend, the only way is up from there, right? So you look for long setups right here towards the upside right here. These ranges are extremely powerful, and this is actually how you truly can simplify it. Okay, you need that strategy, you need that trading strategy, and then it's all about how do you manage risk. What is your risk? What is your reward? What's the percentage of trades that you need to win to make money? Then it's all about data. Right? How many trades have you taken? What are the results of, let's say, 100 trades? What can you do better? Right? Is it better to put your stop loss on break even after a 1R? Is it better to let your trades run? Is it better to move your stop loss, whatever, to break even earlier? Like all these things come the moment you have gathered that information and gathered that data. So you need to gather data, my friend. You need to gather the information. So stop trying, just stop trying to become consistently profitable right from the beginning, okay? Usually what happens is that because you are so freaking obsessed with making money from the beginning, you forget about all the processes that come with it in order to be a consistent profitable trader. And that is understanding your strategy first, understanding your risk management, knowing when to execute, when to stay out of the market, gather that information, gather that data, right? Then start looking at your setups, then start looking at how can I improve, and then finally start thinking about how can I make money in this game. A lot of people are obsessed with making money from the beginning. The reality is usually it will be a complete disaster, because this is usually where most people are getting stuck on, right? Oh, I only make $5 on this trade. It's actually, that's nothing. I don't feel anything. I don't feel any emotions, only $5. So I don't care about my strategy. I don't care about my system. You know what? It needs to be $20. However, now I'm fearful. Now I'm scared because I don't understand my strategy. Now I'm emotional. So risking too much, risking too less, both doesn't make any sense. You need to risk exactly the amount you need to freaking risk in order for you to understand what it is. It all comes from the confidence of your strategy. If you understand your strategy, if you know exactly what you're looking for, if you know the history of your strategy, then all that stuff of like risking too much, risking too less, all fades away. It's all irrelevant from that moment onwards. Okay. So I want you to get to that point. I really want you to get to the point where you are so confident about your strategy that no matter what happens in the short term, you always know you can count on your approach, your strategy regardless. Okay. This is where real money is made over time. Right? Money is not made from the beginning randomly. Yeah, you might get lucky at the beginning. Well, how many times how many times have you been taking trades, making money, and then losing it again? Making money, giving back to the market again. And every single time you're pissed off at yourself and you're going to tell yourself, no, this time, I'm going to do it different. This time I'm going to do it different. Like this was my downfall, but now I'm going to change. Now I'm going to change. And then 2 months go by and you go back to that freaking same position. And you repeat that process. And some traders repeat this exact process their whole trading career. And they never change because they're too lazy to turn their strategy into a full-on trading system. And that's why you will never succeed. Sorry, but that's just the reality. Okay? That's the reality. So how do we shift that? How do we shift that mindset? Okay, how do we change that mindset from constantly changing things up, not following things, not gathering information, not journaling your trades, right? How do we change that mindset to a successful mindset? Well, number one, you need to build a framework. You need to make a decision for yourself and you need to say to yourself, you know what? I am not interested in making money right now, okay? I can trade on a real account, but I'm not interested in making money, okay? I risk 1% per trade until I have done 30 trades, until I've done 50 trades, but 30 random trades, right? So a setup A and a setup B and a setup C and a setup D, there is no way you can quantify that. There's no way. So what you need to do, beginning, is you need to strictly follow 1 or 2 setups that you decide these are the only setups I'm going to trade, and I'm not going to trade anything else. I'm going to trade setup A and I'm going to trade setup B. All right, so you need to first know what setup you're looking for. Then you can do some back testing, whatever, briefly. Then you start testing it. Okay, setup A, setup B. And then from that moment onwards, you take the trades, you start executing. And then after 30 trades, you know, okay, now I have this data. I risk a 2-to-1. So I can allow myself to win 30% of the time and break even. I have a win rate now of 20%. Okay, so I'm unprofitable. I only win 2 out of 10 trades. Well, guess what? You slightly lose some money with a 2-to-1 risk-reward ratio. Okay, yes, you're unprofitable. But then you do another 30 trades. Because you reviewed these trades and you say, okay, I followed these exact setups. I think this is where it has been going wrong. Now I can do another 30 trades. Now I have a 30% win rate. Oh, now I'm practically break even with a 2-to-1 risk-reward ratio. Now I only win 3 out of 7 trades, but I'm practically break even. Okay, great. What did I do wrong? What can I improve? What are the things that I can work on? Okay, it's I'm losing more around this time period for whatever reason, or I'm still closing trades too early mentally. I can't deal with that, or I'm holding trades too long. Okay, whatever. Boom. I'm gonna change this. I'm gonna now put my stop loss on break even after a 1R. I'm gonna test this for the next 30 trades. Boom, 40% win rate, 2-to-1 risk-reward ratio. Now you are profitable. You still lose more trades than you win. You are now profitable. You win 4 out of your 6 trades, out of your 10 trades. It means you lose 6 trades. You still lose more than you win. You risk to make 1. But now you are profitable. All right. Do you understand how this process will literally turn you from being a nobody to a somebody to a profitable trader? This is the data, right? Over the last couple of months here. This is the data since May. So we're talking about 4 months of data, right? 56% win rate. That's not crazy, okay? That's not crazy. Can be better, okay? I had periods during this time when I had a 70% win rate. So out of each 10 trades, I won 7, I lost 3, sometimes even 8. But then I had periods that out of 10 trades, I literally won 3 and I lost 7, for example. Okay, so my average win rate over all these months is 56%. All right. I compare that to my average win to loss ratio. That's 1.7. Okay, slightly below the 2. Sometimes I have to close a bit earlier. Sometimes price doesn't reach my full TP because the volume is low. So I have to, close my trades earlier. But again, that is data that I look at. Okay. Lorenzo, as you know, my win last year was 91%. This year it's 77% at the moment, but I have 5 to 10 different types of strategies or different ways I look at the market. For me, I don't have one strategy. Is that bad? I mean, a 91%, 77%. I don't know what is your risk reward ratio, average risk reward ratio. And that's the only way I can understand like where you're at right here, because 77% with a 2 to 1 is amazing. 77% with a 0.5 to 1 is average, right? Hey Lorenzo, are you still in contact with Thomas? Yes, sir. Absolutely. Lorenzo, can you do a quick check on GU? It's moving towards its fixed very low at 137. Yes, we can check that out. In the meantime, gold right now is breaking or is trying to push up higher. It is gonna face some serious resistance very soon. Silver is actually coming down. Hopefully we get back towards that level. Then we can actually start looking at the markets here. Let's see from there. GBP USD. Let's check it out. GU, baby. Okay, let's see. Daily time frame. We're in resistance right now at the moment. Daily resistance, actually. So that's the first thing I see. We're in daily resistance. Yesterday's candle actually opened up without a bottom wick, so that's interesting. Daily candle is trying to push higher, right? I think that's where we are right now. Internally speaking, to be honest, it's just ranging, bro. It's just ranging right now. We need to either see an expansion or a reaction. We're literally in the middle of a range. So it's really hard to say right now. We're in daily resistance. But at the same time, we're literally in the middle of a range here. Okay. We are in the middle of a range. Yes, we reacted from this range right here. Smaller range. It's probably going to range until the Fomc, to be honest. So it's really hard to give you a direction here. The doctor says I was trading SMC before. I was trading SMC before and it was so brainwashing. I was trying to find a reason for every lost trade. And then every single SMC guru has a different reason, selling you into some theories. Glad I found you an LTA, the real side of trading. Bro. Oh my freaking God, man. This is exactly the reason why so many SMC traders fail. It's because they always have an excuse for whenever the trade goes wrong. There's always some random theory around a certain structure, a certain inducement of this high and low, this liquidity grab from this standard, and then this internal frame of this expansion, like leading into whatever the case may be, right? It's the ultimate Fugazi framework, in my opinion, because there's always a reason for a loss. All right, there's always a reason behind it, and people are so freaking fucking confused. Whenever they lose a trade, they always think, oh, this is what I did wrong, and this time it's this one, and this time it's this one. No, it's this internal fair value gap that aligns with this extra. Bro, and this is why volume is king, right? Volume is king because of the fact that whenever we use a range, we simply draw a fixed range volume profile over that range, and we understand exactly where in that range the most volume has been executed. That is factual, right? If you go on the futures data, look at the futures chart, we mark out that range, we know at that level are the most trades executed. The most interest took place around there. Guess what will happen? The price goes back towards that area, right? Then we have entry models. Then we have certain reactions from these levels, right? Then we have a macro bias. We put it together and it's a really straightforward system. It just can't go wrong with that, right? Facts over subjective interpretations of the market. That's LTA in a nutshell. And when I say SMC, by the way, right, I do not talk about supply and demand, all right? Supply and demand is a real thing. I've seen it. Supply and demand zones do work, okay? I've seen it. It's just all that other stuff that comes with it, I guess, right? And at the beginning, by the way, SMC was all about supply and demand. Do you remember that? There was a period of time where SMC was all about supply and demand. Okay, but then suddenly supply and demand zones were no longer relevant and everyone started to only focus on fair value gaps. Just like, where are the supply and demand zones? What happened to them? Because supply and demand zones are the real deal, man. Supply and demand zones are the real deal, especially on the higher time frame. Okay, when we talk about macro technicals, we talk about supply and demand, obviously, like the higher time frame accumulation and distribution. Doesn't necessarily mean we enter from these levels, from these zones, but we definitely mark them out. Okay, we definitely mark them out. Now, we had a great example, and that was, for example, the New Zealand dollar against the Japanese yen. We talked about, you know, Forex. We talked about the correlations as well. We said the New Zealand dollar against the Japanese yen gave us a fantastic setup. What was the reasoning behind it? Well, number one, the New Zealand dollar looked weak against all the other currencies. The yen basket was in 12-hour demand. Look at that, 12-hour demand. The New Zealand dollar basket was in 12-hour supply. Okay, so the New Zealand dollar was weak and the Japanese yen was at least holding support. So what will happen with the New Zealand dollar against the yen? Well, obviously, if you go to New Zealand dollar against the yen on the 12-hour, guess where we were yesterday? We were in the 12-hour area of supply. Now, that's the higher time frame supply zone. Okay, we utilize that larger distribution, but we don't execute. So what do we do internally? 30-minute time frame. We create a range. in that 12-hour supply zone. We knew by default on the Japanese yen, there is a higher chance the yen is going to go up, and there is a higher chance that the New Zealand dollar will go down. That's just market structure. Very simple. We get to the 12-hour supply zone on the New Zealand dollar against the yen. We then wait for the range to break. We have now a bearish bias in our head, so we're only looking for shorts. We wait for price to break down, pull back into the area where the most volume is traded, which is the value area low or the POC. And we execute our position. Right? Stops go above the highs right here. And we target a simple 2-to-1 risk reward ratio, right? That's pretty much it. Now, the number one rule, if you trade currencies like cross pairs, this is my number one rule. I always put my stop loss on break even after 1 hour, always. Okay. And what's going to happen a lot is that you are gonna break down, right? You are gonna lose a lot of trades on break even. You don't lose them, but you break even. But the trades that you win, right, are the perfect executions, right? Consolidation, expansion, retrace, continuation. Here, I had the CME, consolidation, manipulation, expansion, retest. I got tapped into my position. Price came down. It tapped into a 1R. For my stop loss on break even, guess what happened? Price came further up, all right? That didn't work out here. Australian dollar against the New Zealand dollar. Look at this one, same thing. Consolidation, manipulation, expansion. Price pulled back into the POC. I entered, price came down, 1R, put my stop loss on break even, got stopped out. We're still hovering around here. So yeah, you're gonna get stopped out sometimes. This is why trade management is so freaking important. It's so freaking important. FX Horizon says, hey Lorenzo, I saw that you're using the volume on the gold CFD. Why do you use volume on Forex? Volume on Forex are not correct. It depends from each broker. Yeah, this is why I use a Wanda. We have been talking about this argument all the time, right? Futures versus CFD. CFD is wrong and futures is correct. But if you use the Wanda chart, and I have been literally testing it out on every single Forex pair you could ever imagine. And it works, man. It freaking works. All right, look at this. This is the Euro GBP yesterday. Look at this. We have that range on the Euro GBP. I missed out on this trade. Price broke out to the upside. We now have this range right here. I mark out the profile on this range. I mark out the fixed very high. And I mark out the fixed POC. What happens? Price pulls back. Goes to the freaking moon. Right there. And this is not just one time, bro. I can tell you from my experience, and you don't have to believe me. If you don't want to believe me on the Forex pairs like the CFD charts, don't believe me, but I have truly done this 1,000 times. Thousands of times right now. Yeah, but I do only use the Oana chart. So that's an important factor to take, or maybe take consideration. I don't even know for sure if that's the reasoning behind it, but I've been using the Oana chart. It's one of the biggest brokers out there, obviously. So it could have something to do with it. There is still on the major pair sometimes a difference between spot and between futures. So where I have the opportunity to use futures, I will use futures. I will use the futures chart. And I always will layer the CFD chart on top of it. Because I tried with different charts and it showed different levels. Yeah. Yeah, it's definitely true that sometimes you're going to get different levels. It might get confusing. But I would highly recommend to use the one chart for sure. For sure. Hey, Lorenzo, okay, please check the Euro USD. 50-minute price is ranging. Yes. All the currencies right now, pretty much all the major pairs are ranging. Euro. I think the Euro reached daily resistance, or it reached weekly supply actually. Euro reached a weekly supply zone right now. Look at that. We are now in a weekly supply zone right before the FOMC. So interesting. Yeah, Euro need to break. Euro need to break. I don't see any trades on the Euro. I don't see any trades on the pound against the dollar. It is all waiting for the it's all waiting for the FOMC here right now. And the dollar is still looking relatively weak. You can see that right here on the dollar yen. Same thing, but right now that's pretty much it. Yeah, but I do like overall. I do like commodities. Andrea, hello. A bit late myself. Are you planning to sell gold, Lorenzo, or no trades to FOMC? We'll see. We're waiting for silver to break down. We're waiting for gold to come back right now at the moment. Yeah, gold is gonna enter resistance soon, so we'll see. We'll see. We're trying to be a bit more cautious around the FOMC regardless. I will definitely reduce my risk. And if I take a trade, I will definitely reduce my risk for sure. Yeah. Let me check what the guys are doing here. What they're looking at. So first, we're going to check Andre. Andre, silver longs. Ronak. Let's see what Ronak is doing here. Ronak just entered a GBP yen trade short. Yo, Ronak, my friend, are you there? What's up, bro? Okay, I see you're in the chat. Yeah, man. You just entered a GJ short. I see the CERC here. The yen looks pretty strong, right? The yen looks pretty strong. We're going to check it out. We're going to check it out. Thank you, Ronak. Thank you for sharing here. And this is what happens in the trading floor, right? There's always inspiration. Sometimes when I'm looking around and look at the market, I always get some inspiration from them. Shout out to you, my friend. Ronak. He's one of our, you could say this guy has been with us for a while now. Shout out to Ronak. Aha. Okay. Oh, shit. I think we missed out on that trade by literally 2 pips. 3 pips right there. Yes, sir. 3 pips, babies. I think we missed out by 3 pips on that initial trade here. The reason why we were looking at this one right here was the following. I think it was the following reason right here. We were getting rejected clearly from that resistance, number one. Previously already, we did swipe the highs, and then internally, we saw this range. We broke out, we broke below that previous range, and we turned that range into resistance. And we actually just never tapped into that level, and we broke and we sold off here. So yeah, I missed out on that setup. However, Ronak right now, shout out to Ronak, utilized this range that we created here. The POC of that range right here. And you see, if you go internally, you can see here that we created that range. We broke down, we pulled back, and we're now getting rejected here. So the thought process is look at further continuation to the downside. Yeah, I think that's the situation with GJ. GJ looks bearish, very bearish right now at the moment here. The yen looks really strong. The yen looks really good. If you go to all the trading assets right here, I want to know, what is the pound doing? The pound doesn't look that weak overall here. Okay, the pound has been doing pretty well. The only thing that has been doing better than the pound is the yen. The yen has been holding up really well here. The euro seems to be weaker. That's the thing with the euro right now. The euro seems to be weaker than any other currency. So the euro is also quite interesting as well here. So yeah, GJ. Check gold. Yeah, gold's breaking out. Gold is trying to break out here. I'm not seeing a pullback happening anytime soon, that's for sure. Let's go over gold here. Yo, Andre, my friend.
Hey, Lorenzo.
How's it going, bro?
All good. Sorry, I was a bit unable to speak. I'm in a long silver.
Yeah, so you look for the continuation on silver right now?
Yes, initially I could have taken it from 1 second to go on the silver futures chart to better visualize it. So initially I could have taken it from this big range.
Yeah.
From this fixed POC here, but the stop loss was really big, like almost 2%. So I didn't want it to risk that much. So my thought process was to reclaim the previous weekly POC and also the previous weekly value area high to also create some higher highs to see some proper continuation. So
right.
Yeah, I have been waiting for the hourly closure and the New York Stock Exchange open. So let's see if we get some continuation right into the Sunday Open.
And you closed above the very high, right?
Yes.
Okay,
But
nice.
we'll see if we get the continuation.
Yeah, silver looks crazy. If you look at the CRC right now, it was picture perfect
Yes.
before the New York Open.
Yeah. Clean.
So good, so clean.
Yeah.
Just keep in mind that we're gonna reach that range soon. Yeah. You already have the range taken in consideration.
Yes. I have marked out this one, right?
If you can see my screen, then it's probably delayed, but you know exactly what I mean here. You should already be on break even by default. If you are long right now, then
that one. Oh yeah, that one. Yeah.
Super important. That range, mark that range out for sure. I think that's going to be very it's going to be an area of resistance for sure.
Yeah,
absolutely.
Of course. Yeah. Until that one, I will have it on break even if we reach that point. Yeah.
Amazing. Yeah, for gold right now, if you go and look at gold at this current moment, we are now in rejection territory, guys. Okay. I think it's important to really pay attention to what is happening here at this moment right now for gold, because gold right now is back at that same range. We talk about these ranges all the time. All the freaking time we say, pay attention to previous ranges and pay attention especially to key levels around these ranges right here. And right now, gold has been pushing down. We are now back at resistance here. So gold either breaks down. If we flip bearish, there is a chance that gold will just, you know, close below and start pushing down again. If that's the case, then that's definitely a possibility. If we close above this fixed very high level, that would really change the game here, right? That would really turn this range into support, which is also an interesting thing to look at because you are in a macro, you're still in a macro uptrend right there. So both of those are looking overall kind of interesting right now. If you look at both levels. And if you then go to the dollar, I think the dollar right now at the moment is, I mean, where the dollar is at, but the dollar right now is kind of finding it's not looking strong, it's not looking weak. It's kind of in the middle here, kind of holding up above this level. We have been breaking down here. We are also getting rejected from that level here. The gold has a really hard time breaking above it. So what has been happening right now, this is actually kind of important. If you open the sessions here, I think the London highs are taken out right now, correct? Yes, London highs are taken out right now. We are tapping into the POC here. We are getting rejected from that trend now, or that we are forming. We haven't fully pulled back into that range yet. Dollar is at support. This might pull back. This might's gonna pull back here. This actually can just pull back here, to be honest. Are you going to post some videos about Volume on your YouTube channel? Yes, sir. We're gonna drop a bunch of content around Volume. Absolutely. It's a must. It's a must. It's a must. Do you see, guys, how important, once again, how important this range is right now? And how we're getting rejected from the point of control once again. Right? The area where in that range the most volume is traded. After this range was created, that very clean range, we broke out, we pulled back, we held support. We came above, we eventually broke below, but we immediately turned it into resistance. And this is where we now are getting rejected from, right here. Okay, all while the dollar is right now holding up in this range right here, where we finally are pulling back to as well here. So I think there is a chance of a pullback. I think there's definitely some potential here that gold will potentially push down and try to break down at least. If I would take a setup here, right? If I would take a setup here, 100% I will reduce my risk by half. There is no way I'm going to go full risk on an FOMC day. But the risk reward seems reasonable to me. I'm going to wait for this hourly closure. It's a good rejection here. Lorenzo, what strategy did you trade 5 years ago before the fixed range, before the volume profile LTA? My strategy, right? So many different things, man. So many different things. I tried the moving average RSI divergence strategy. I tried. I've traded SMC. You know, I've been testing out so many different. But once I came across Fomc, I never stepped away from it. Once I came across the volume profile, it's just that's it, and I stick with it. I never changed it. I made my decision, and the rest is history. I mean, I know guys, literally in the group, for example, you have to understand that some guys in the group, their first strategy, their first thing that they've learned is LTA concepts. First thing, right? They go all in. They know that's the only thing they know. Imagine a baby that has zero information. It's a sponge. You can learn them anything right away from the beginning clean. You don't have to unlearn a bunch of garbage, right? A bunch of things that they've seen in the market. Pattern recognition that they've seen that just doesn't make sense. It's extremely hard to unlearn somebody that perception someone has, right? Of that idea. Someone saw a reel 5 years ago about, oh yeah, you don't need indicators to become profitable. Indicators are bullshit. You know, someone watches that reel one time and they think, oh yeah, indicators are bad. Indicators are bad. And then they see someone like us with our volume profile, right? Which is, by the way, a tool. It's not even an indicator. And they think, oh, indicator, bad. It's extremely hard to unlearn bad behavior, but it's extremely easy to start with simple guys that actually know exactly, to start pretty much with an empty, an empty sheet, a clean sheet. So much easier. So much easier. Indicators are lagging, exactly. Like this guy, Matteo. Indicators are lagging. That's one of the biggest arguments, right? But what people don't understand is that there are indicators out there that have nothing to do with the technicals. All right, waiting for disclosure right now, guys. To be real honest, if we close below here and we break below this structure, we are pushing down. We're breaking below the structure here. The London highs are taken out. Dollar is now holding at that support here. Dollar is actually, you see this uptrend on the dollar here, or that, I mean uptrend, that intraday, that lower time frame break, the way we're looking at this range right now, expansion, retracement, how we're holding the dollar here, how gold now has been pushing back towards this range, is getting rejected after the London highs are swept. If we do flip bearish here, I do see potential downside. I will take a trade there and I will execute a position. I will simply lower my risk though. I will lower my risk for sure because of the FOMC and stuff. There are periods when I, utilize my risk, my regular $1,000 per trade per account. I think I'm going to reduce it by half. I think that makes sense. We're also in a macro uptrend, so this is also a pullback trade, so it makes even more sense to reduce my risk regardless. But it is worth it. All the stars are aligning. We're getting rejected. The dollar, we swept the highs of London. We have all the things already behind us. The New York Stock Exchange open. New York open. No unexpected things. So I think the probability of a potential flip here, if we do flip this candle after this closure, we create a top wick, we flip it. We might be able to pull it back here. If we enter there, stop loss goes above this range. Not above this high, no, above this range. Which is above that high, but you get the point. And then the pullback into the larger range right there. Back towards this range. Something like that, guys. Something like that. Gitendo said, Lorenzo, yesterday in gold, you were buys, you were up 130 pips. Don't you think you should have taken some profit? I mean, you were in great profit. That's the problem, man. This is the biggest trap that I've experienced myself when I started trading. It's always pulling back towards my previous trade and always remembering my previous trade. I should have taken profits. Yeah, but the reality is, how many times over the last 20, 30 to 100 trades, 200 trades, was it smart to take profits there? That should be the question. And if you don't have an answer to that question, how many times should I have taken profit there over the last 200 trades? Then there is no answer to that, right? There is no good answer to that. So you need to know that first. And what I've noticed from my side is that sometimes when I go to a one-to-one, I put my stop loss on break even at a one-to-one, and then price comes back to my entry and it breaks even, right? I break even. Then people say, yeah, you should have taken profits. You should have taken profits. But to be real honest with you, over the course of so many trades, it would not be beneficial to me to take profit early. Does that make sense? It would just not be beneficial to me. So yeah, it is unfortunate, but this is just part of the game, oh. It's just part of the game, really. I'd rather break even knowing I followed my plan exactly than closing my trade too early, knowing that over the long term, it's not beneficial to me. Then I made money for no reason. I made money, but I would feel from the inside that I would not deserve the money. I would end up I would self-sabotage myself, you know? Over time. I did this before though, right? I've tested everything. So don't get me wrong. I tested everything. I had my TP1, TP2 phase. I had it. I've done it. and it was cool, and I have more wins and I made more money. But over the long term, I would make more money if I just would simply hold on to my position. I mean, some guys, they come in, they are in the trade. Sometimes they catch 20 pips, sometimes they catch 7 pips, sometimes they catch 50 pips, and it's great for them. But the problem with what I've experienced, and I can just only talk for myself, right? The problem that I experienced with that is that you create a certain situation for yourself where you cannot afford to lose. You cannot afford to lose, because if you lose, you pretty much ruin everything, right? Because you will lose probably much more than you initially won. And you have to build back the momentum. You have to build back your account. That one loss can wipe out your whole account. Literally, I've seen it, guys, happening. They were constantly winning, taking profit. One big loss, they're back at the beginning. Square one. What closure do we wait? Closure has been made already. We need to flip bearish, man. We need to break that candle. We need to break down. Entry model 1. Entry model 1 right here. We can show this right now. This is on page number 57 of your ebook. 57 of your ebook. Candle formation, break below that candle. Stop loss could be above the candle, sometimes above the range if you have the risk to reward ratio for it. EM1, EM1, EM1. So we need to flip bearish and break that candle. What's your pip take profit, or is it normally calculated on the entry? So I only work with risk to reward ratio. If I can do a 2-to-1 risk to reward ratio, and it doesn't always have to be perfect, right? Sometimes it will be a 1.9. Sometimes it is a 1.8. Sometimes it is a 2.1, right? But I want to make my average, let's say, a 2-to-1 risk to reward ratio. I look at my target, my macro target, and I would say, does it make sense that if price gets there, that I'm not like trading into like massive resistance or support for no reason, right? Because it will never play out this way. So I always look at my target, number 1 first, and see, is it even possible to trade towards that target? And if it's possible, I don't see a reason why not to take the trade. If it's not possible, I could say, okay, and maybe it's not the right trade, I avoid the trade for now. I might just simply avoid the trade, look for the next opportunity. There are endless opportunities in the market. So this is the reason why I use a 2-to-1 risk to reward ratio, right? With a 2-to-1 risk to reward ratio, you only have to win 33% of the time to break even. Okay? That means that you, roughly speaking, can lose 7 out of 10 trades to pretty much break even. Okay? Pretty much break even. You might have a small loss. Okay? The moment you win 4 out of 10 trades, that means you lose 6 trades. So that means that you lose 6 trades and you win 4 trades. A 40% win rate should already over time make you profitable with a 2-to-1. It might not be much, but it's at least something to think about, right? If you can work your way up from 30 to 40 to 50%, you're going to make a bunch of money here, okay? You're going to make a bunch of money here. Matter of fact, let me show you something on AI And let's do that calculation here. Okay? Let's say I risk 2% per trade. I'll take, and I take 10 trades with a 2-to-1 risk to reward ratio. Show me the results in dollars and percentage of 20%, 30%, 40%, 50%, 60%, and 70% win rate. Exclude break-even trades. All right. This is what it says. So got it. Let's assume you start with a $10,000 account. So 2% risk per trade, $200 risk per trade. The reward is a 2x. That is $400 gain per win. You take 10 trades. Here's how it breaks down. Risk to reward setup. Risk per losing trade. Minus 2%. Reward per winning trade is 4%. Okay? 10 trades total. So with a 20% win rate, right? If you would win only 2 out of the 10 trades and that's it, nothing else, two out of 10 trades, okay? You will be down 8%, okay, after 10 trades. Risking 2% per trade. With a 30% win rate, you would only be down 2%. So you would only be down 1 R. Okay? Because 2% is 1 R. With a 40% win rate, you will be up 4% already. Okay? So that means you win 4 and you lose 6 out of trades. You will be up 4% after 10 trades. 50% win rate. 5 wins, 5 losses, 2-to-1. You will be up 10%. Do you see how important it is to keep this fixed? Because if you know, okay, I'm going to take 10 trades right now. And I'm going to, no matter what happens, I'm going to see what happens after 10 trades. I might have a 20% win rate over time. Okay, cool. I lose 8%. Whatever. All right. It's a $100 account. I risk 2% per trade. It's all practice. I'm optimizing my strategy here. The next 10 trades, boom, you're now up 30%. The next 20 trades, you're now up on a 40% win rate. And you slowly start increasing your average win rate over time, following that exact same method. And your goal is to work your way towards that 70% win rate. That's your target. That you win more than you lose. Do you understand how a 2-to-1 risk-reward ratio is extremely beneficial for you? It is not crazy, okay? It is not crazy. There are guys that are aiming for a high risk reward. They lose all the time and they win that one big trade. But because they're losing so much, their psyche gets hit and they start fucking up. Then you have guys that are taking profits all the time right away after 1 R or lower than a 1 R. And they forcing themselves to have a 85-90% win rate to make money in the markets, which is obviously not sustainable. Everyone will deal with losing streaks, right? So the 2-to-1 for my perspective is the perfect hybrid. All right, the 2-to-1 may be working your way to a 3-to-1 if possible, but a 2-to-1 is the perfect hybrid because then you have something that's called ATR, the average trading range. Okay, that's a game changer. Markets only move a certain amount of pips during a session on average. Okay, the 2-to-1 for me allows me to place my stop loss exactly where my stop loss needs to be. That's it. So if you can get a 60% win rate with a 2-to-1 risk-reward ratio, you're absolutely killing it. And that means you lose 4 out of each 10 trades still. That's it. That's it. So yeah, entry model 1, if gold flips bearish here. That's what we're waiting for, kind of to see if that can happen. For now, it's holding up really well. So definitely no trade yet, for sure. If gold breaks out, different story. We're dealing above the range. We'll probably turn fixed for high into support. But then the dollar needs to break down further. So yeah. Be cautious around the FOMC, gents. Be cautious. Wait for the right confirmations. Don't rush into your position. Are you bullish or bearish today for the dollar? I'm neutral. I can't predict the market, my friend. I cannot. I don't know. I am neutral. I am neutral. We'll see what happens. We'll see where we can get our confirmations. In the meantime, I really appreciate you guys tagging me on Instagram right here. It's really been awesome. You guys are tagging me right now, following the book, downloading the war map, printing it out, actually. It's crazy that you guys are actually doing that right here. Shout out to you, bro, Ruben. That's really, really awesome. That's really, really awesome. That is really awesome. That looks so dope. Shout out to you, my friend. Time to come back to Bali, bro. Why didn't you take the long yesterday on gold with the same fixed POC? We took a long yesterday on gold, actually. I'm not sure if you are if you were there, but we were in a long position yesterday. We did take a long on gold. So our trade entry was the following entry. We ranged here. We broke out of that range. We pulled back. We entered. We looked for the continuation. That's it. Price broke out. We put our stop loss on break even. It reversed. Unfortunately, came back to our entry. Dollar breaking down, gold breaking out. So no flip. This is why it's so important to wait for these confirmations sometimes. Wait for that flip before we execute. So far doing well. Silver pushing, dollar breaking down, still holding up. But if gold closes above, obviously this is invalidated. We're not going to execute if this flips bearish. If it flips, it's crazy though. If this would flip, that would be crazy. Andre, silver, nice. Shout out to Andre, my friend. Closure above the previous weekly very high. Stop loss and break even, I guess. Lorenzo, have you ever tried bet trading? I had a friend who does it. It's actually a thing. What somebody told me was, Lorenzo, you should stream on Pump Fun. I'm like, bro, what? Pump Fun? Yeah, Pump Fun is like the new streaming platform. You the moment you stream, it's pretty much on the blockchain. So the moment you stream, what happens is that you're creating a token. You create a token. Yeah, you create a token for yourself. It's connected to you and you will make money over all the trading fees. What? Pump Fun? Damien Beat says you use only this strategy? Yes, sir. Only this strategy, yes. Is that not enough? Not enough? One strategy, man. That's it. One strategy. Obviously, there are variables. Obviously, there are periods where I risk more, where I risk less, where I manage my trade differently, where my bias shifts. Obviously, but from a strategy standpoint, not from a bias standpoint, a strategy standpoint, it's pretty much the same. It's pretty much the same. Do we only trade ranges now and not the previous daily anymore? Yes, for now, yes. Number one, it's very easy because we can just focus on 2 different layers. Otherwise, it gets extremely confusing. And secondary, it all has to do with the higher time frame on the dollar. The dollar is in a flat range. If the dollar is in a trend, larger, cleaner expansions without ranges are going to be much more likely. So you're going to see things like this here. Okay, price, boom, boom, boom. This is where previous daily levels are so important. But the moment we work with ranges like this, like that's the moment when we just have different. These are different market conditions. This is why we utilize a lot of ranges right now at the moment, yes. And it has been working really well. Probably 80% of all the trades that I've taken over the last 2 months, so August and July, were all range trades. At least 80%. Bonanza, when is the current gold setup invalidated? Closure above the fixed very high. Yo, Lorenzo, I want to appreciate you for making the LTA ebook, making it free. It changed a lot for me. Previous book also, want to meet you one day. You're an awesome trader, of course, but as a human also, appreciate that, bro. Shout out to you, man. Amazing to hear that. Amazing to hear that. Like, our team has been working extremely hard to write in a book. People think, oh, you just write a book in AI, right? Or write me a book in AI. Like, just that's it. Well, guess what, my friend? That's not how it works. We're not there yet. Trust me. We are not there yet. Okay. We have so much information and so many things that we're looking at. Everything had to be picture perfect. So a big shout out to my team. We've been working so hard to make this happen and to give this for free. Okay. Why is it free? Well, number one, all this information in here is not unique. Okay. It's not that I created the fixed range volume profile. Okay. I didn't develop this. The volume profile. Okay, I took a lot of concepts from a lot of different guys that I've been working with, and I started to understand the market in a different way. Macro is different from micro. You need a different approach on the higher time frame than you do on the lower time frame. That's it. You should not treat the higher and the lower time frame the same. That's the conclusion. But you cannot neglect each other either. You need to utilize the higher time frame if you want to trade on the lower time frame. You want to trade the higher time frame, okay, you can neglect the lower time frame in many ways as a swing trader. If you trade the lower time frame, higher time frame is important, but the higher time frame is different. It runs different. Different market participants are in the market for a different reason on the higher time frame. On the higher time frame, it is a much larger accumulation distribution. It's much more fundamental based. It's much more built around what they think will happen with certain currency or commodity based on a variety of reasons. Okay, that's the higher time frame. This is where institutions every single month decide, I'm going to buy an X amount of gold every single month for the next 5 months. Like, that is the higher time frame. Okay? So you need to look at the higher time frame from a different standpoint, and you need different data to allow you to understand what's happening there. Okay, once you get that and once you understand that there is a difference and you acknowledge that, we can move to the second step, and that is the question, okay, but if the higher time frame is larger accumulation distribution, then what is the lower time frame? Lower time frame is all about the market auction. It's all about the marketplace. Buyers versus sellers, aggressive buyers versus passive sellers versus aggressive buyers. It's all about orders executed in the marketplace, algorithms that work overnight, day in, day out, on these major indices, whatever the case may be. A bunch of orders are getting executed in the marketplace. That is completely different from the higher time frame accumulation and distribution. But you can't ignore the higher time frame when trading on the lower time frame. You need to understand what's happening there. So if you dissect the higher time frame, which is in my opinion, the market sentiment, the commitment of traders, the sentiment extreme, the open interest, the expiration dates, etc., all these layers, and you utilize the lower time frame, volume is king method, the volume profile, the intraday trend, and you work your way from higher to lower time frame, that's where the magic happens, right? This is how LTA is created. It is to understand both sides of the party and to work your way towards an execution. This, by default, has been, roughly speaking, the hardest time, okay? The hardest time possible because of the fact that the dollar has been flat in a range over the past months right now. We had some of our best months this year, regardless. Imagine what will happen once the dollar starts trending. I don't care if it's coming down. I don't care if it's going to break out. Once the dollar is trending, once we have that set, we'll absolutely clean up here. We'll absolutely clean up. So the book is created for you for that reason. It's to help you out, to give you all the insights I'm talking about in depth. Okay? Many of you guys are going to read the book. You're going to scroll through it quickly. You're going to go straight to how can I execute a trade? That's fine. Many of you guys are just, you know, doers. You want to just start, kick it off, get involved, execute a position, boom. That's why you started chapter 1. This is why we have set chapter 1 at the top chapter, the volume chapter, the execution chapter. Right? We haven't put the execution chapter below. You have to put the execution chapter above, so you can get to work right away. You can use the volume profile, you can get to work. But once you see that the volume profile works for you, and you start adding on the other layers on top of that, welcome to the big league. Welcome to the big league. This is where you know, your mind gets really open up and see, you know, you can really see the difference there. Okay. So if you haven't downloaded the book yet, this might be your chance to download the book right here. It's just a must-have. Okay. I know you've probably downloaded a ton of ebooks, which is just like a 3-pager with some sales funnel in it. I can guarantee you that's not what we're talking about here. Okay. It's a book created, and we have built an ecosystem around this book here. So what we do is I go to the streams 3 days a week. I don't care about the market conditions. Sometimes the markets are shit. Sometimes the markets are great. We take trades, we execute positions. Okay? But what I do care about is introducing this information to you in real time. Okay? Over the next coming months here. So it's a journey that I think you need to join. All right? It's a journey. If you want to make a difference in your life and you want to learn something on stream, Tuesday, Wednesday, Thursday, 8 a.m. EST, you want to follow that system, then you can learn the book. You can study the book with me live on stream here. Lorenzo, the bad trading I'm talking about is option trading. It's when you execute an order for a... When you execute an order for a limited amount of time, and if the price goes in the direction that you bet on, profit after. Okay, wow. Caesar says, just got my free copy. Thank you. Amazing. Enjoy. Enjoy. And some of you guys are probably going to read the book and you're going to do your own thing. That's fine. Do your thing, man. Enjoy. Other one of you guys are going to take trades with us. And you're like, man, I need to get involved here. I need to get into the community. I need to get into the free Telegram. I need to get involved. I need to start seeing other people in the group killing it. I need to gain some motivation from other guys crushing the markets here, executing all the exact same trading system over and over again here. There is not a single trader in our community that trades different from our strategy. We have literally trained them to follow that exact same method, that exact same system over and over and over and over again. So there are no outliers here in our group. There are no guys that trade a bit of this, and then there are other guys that trade that. It's so much better when everyone trades the same. It's just so much better. Because that's how we can grow together. All right. If one trader takes this trade or trades this strategy and the other trader trades that strategy, there is always going to be a winner. There's always going to be a loser. And they're always going to be telling each other how good their own strategy is. It's not going to work out. So if you are in a group where people trade different, get out of that group because you're going to get extremely freaking confused. You need everyone to be on the same page, right? That's the community owner's responsibility to create a group where everyone trades exactly the same way. And yes, in the end, people are going to have variations, whatever. But if the core framework is the same, everyone will benefit from it. Because it's almost like putting all these brains together, making a cumulative decision, and that will just increase the overall feedback loop, increase the way you learn, and it will just simply speed up the whole process right here. So other people are going to be like, I'm going to go into the Telegram. I'm going to join. I'm going to click on this link. I'm going to get involved here. That's it. Faid says, you said to join the Telegram, you have to have first $350 in your Vantage account. Is that correct? Yes, that's correct. So here's how it works. You either sign up with Vantage. That's a broker that we utilize. If you sign up with Vantage and you deposit money on that account, then obviously we will benefit from that. Okay. We will make money on each trade you take. And you think, oh, that's bad, blah, blah, blah. Scammers will take money from you. Well, obviously we want you to win, right? Why would we write a 300-pager for you? Why would I go on stream every single day, trade live myself, show my own history, my own trades, if I want you to lose money? So that's the first thing you can do. You can sign up. You can deposit $350 on your account. And then we benefit from that. You benefit from that. We give you setups. We explain the process. We all make... It's a win-win situation. If you said, I don't want to deal with that, that's not my style. I have my own broker. This is what I like. I like this broker. I don't want to move to that broker. Whatever the case may be, that's fine. Then it costs indeed $400 one time. Okay, we still have not a closure above, so the trade is not completely invalidated yet if we turn and break the lows here. But at the moment we break higher and we close above it, yeah, we're not gonna. I'm no longer gonna look for any short setups on gold anymore. That is definitely not the case. If that's the case right there. Do you think the news will be bearish? I have no idea, bro. Like, I'm not here to predict any news outcomes. Nothing. I cannot. Everyone who tells you this is what's gonna happen, and then it happens, and then they're gonna say, and then they're gonna tell you, you see, I knew it was going to happen. You know, that is what you're gonna get a lot. And then you think, wow, oh my God, he's like, bro, in my opinion, it is just pure luck. Everything that has to do with news, it can literally go in all directions. The only way I would trade news is the following, okay? The only way I would trade news is the following. This is one setup during news I would trade. And I have been trading this on stream. And that is, I anticipate some sort of manipulation. So for example, we have a range here. And we have a key level in that range. So let's say we have the fixed range volume profile here. And we have the POC here. Price is, let's say, down there. It's ranging here, right? is doing something like this. So like it's kind of trending upwards slowly. News comes out and price shoots higher into that range. I usually have, if I would trade news, that's the only way I would trade news. I usually would have a limit order set at the POC here and my stop loss above the range. And then I would target the lows of that slow build up, for example, right here. And I would look for that manipulation. So I would wait for price to shoot up during the news, get triggered into my position, and go against that push towards the upside. Sometimes you're going to get stopped out, which is normal. But other times, price does do that, and you create a 4-to-1 risk-reward ratio, a 3-to-1 risk-reward ratio. Then you have 3 more news events to do to break even pretty much. So if you have some sort of a side pot for news, where you say, okay, I hit my 3-to-1, now I have 3 free rolls. But that's the only way I would do it. And that's exactly what I have been doing in the past. Where I placed an entry, I believe it was like below. Sometimes it hit it, and then other times I literally missed out on a pip, for example. It comes up during news, doesn't hit my entry, missing out on 1 pip, 1 or 2 pips, and it then breaks down. I understand, but why are you looking for shorts now then? Not because I think gold is going to come down. I don't know if gold is going to come down or not. Okay? That's also a big misconception, is that people expect me to understand where price is going to go to in the next 30 minutes. If price closes above, it closes above. But if it breaks down here, I personally believe that there is a bigger chance that we continue to go down. So do you understand the difference there? In me predicting that price is going to roll over, it's going to come down now. Or if price breaks down here, I think the chance is bigger we will get, or we will push down further. What about breaking the POC, fixing it, retesting and pushing further? Yeah, but the only problem with that is that you're going to deal with this range right here, right? So let's say you would push down here, you would enter here, you're going to deal with this range, with this resistance in that range right there. So your risk to reward is not going to be beneficial enough. So this is why, only from today's perspective for gold, because we didn't enter here, because this was before the stream, the only way for me would say, okay, if that reversal takes place and the dollar would hold, then this would make sense, half risk, to get involved here. But a break above here doesn't allow me to look for continuation plays because of this range and all the headache that will come with it. You're gonna tap into all that resistance there. And yeah, these are another, you know, it's a smaller range that has been created that contains information. That means that right here, we're gonna face resistance. And that means that if I would enter here, I would never be able to go to reach, let's say, 1-to-1 and put my stop loss and break even safely. So that's why it's, to me now, if I look at gold right here, because we didn't enter obviously on stream before, because this was all before the stream, this made sense from like this standpoint. It's either a short or nothing, right? Or you have to break above that range and turn that range into support. But again, then we're just like, you know, it's already FOMC time. It's already late. You know, this is where the volume already will come down right there. So that's it. That's the only way for me. It's either a breakdown or nothing, pretty much, right? I'm not going to force anything else, especially not during the FOMC. Well, that makes sense. And another layer, what I can say is that you should never trust this first move on the dollar after the FOMC comes out. Rabib says, can I ask a question? Do you not trade price? Not price action, gold trading between 3,700, 3,600, and I gave you today a 40. Can somebody help me with this question? Maybe I'm reading it wrong, truly. Maybe I'm just reading it wrong. Anyways, it's also possible to sell in the POC 3688. That's a good question, because right here, obviously, if you get rejected here at this level, you know, you expect price to roll over. The only problem is that right now you closed above this level, right? You closed above the 3681. And because we closed above it, it could turn that into support and continue to drop higher, right? Push down, gets rejected, pushes down, and then turn this into support, and then pretty much continue higher. So this is the reason why I want to break below this structure for me to be more confident about sells. Lorenzo, where do you live? I live in Bali. I live in Bali already for 5 freaking years. It's crazy. Whenever you know, whenever that in the world where we got lockdowns and all that shit, I had two options. I could either fly. I was in Barcelona at the time. I could decide to go back to the Netherlands, or I could book a one-way ticket to Bali and stay there during that period. And I decided to go to Bali during that period. I took the last flight towards Bali before the lockdown there in Indonesia. Before everything closed down, I took the last plane. I was literally on the last plane before that lockdown, before the closure. And the rest is history. I never came back. Now I have 2 kids. You know, time flies, bro. Time flies. You don't talk much about your macro time frame indicators. Everything has a time and place. Everything has a time and place. We talked about it at the beginning of the stream. Highly recommend to go back and check it out. Yeah, for now, gold is pushing up. So if we don't break down, I don't see a clean trade towards the upside. That's the problem. I don't see a clean trade towards the upside here. I can see it going up for sure from here, but I don't see a clean trade towards the upside. That's what I'm saying. So let's see how this hourly candle closes. I think if we close above the fixed for high, which is this blue line, I think that short is invalidated for sure. Because it's going to take definitely too long for price to pull back, if it doesn't even come up higher. Razinda says, nice. So you are orang Bali Sekarang. Sedikit, please. Sedikit. Simon says, LTA 3R today on the GBP USD. Are you in our Telegram, my friend? Are you in our Telegram? If so, you share the win in our Telegram. Dollar cat. I've seen the dollar cat. I've seen gold, silver. GJ. Well, Simon, get into our Telegram then, my man. Then it's time to get into our Telegram right now. Share some of your knowledge. Wild says, I understand there are no more good point of interest for buys. For me, no. There are no clear buy signals, or there are no clear buy setups for me right now. The only clear buy setup for me would be pretty much this, right? We would create a range, pretty much like this here from yesterday. We would break above this range. This could then be the manipulation here. Then we expand, we break above this range, we pull back, we turn that range into support, and we can look for the continuation. That's one way. The other way would be price just comes down, comes into this larger range, and simply expands towards the upside from there. So I would buy here, or I would buy above here, right? Above here where it's clean price action. Now we're dealing with this range. So buying into that range is very tricky. I'm not saying it will not break through it, because it could, but it's just not tricky for me personally. It's a bit too much. If we break down here, I can see this rejection being clear, the closure being clear, and I see a reason for price to still pretty much come back to that range, which we haven't properly tested yet. But because it's, let's say, a counter trend trade, right? It's against the macro trade, the macro trend. I would reduce my risk by half. Can you please explain your Friday's gold trade? Sorry if I missed it. Friday. I think you're talking about Monday, right? Monday's gold trade. Yeah, that was the biggest trade of the week, for sure. That is really where we made... This was the biggest trade of the week for myself here. It's the moment we created this range, we broke down, we closed above it, we turned it into support, and we just kept going up from there. So we took a long here. We put our stop loss below, not even below here, right below. And yeah, we pretty much entered and we targeted that 2-to-1 restored ratio right there. And that was Monday's trade. Monday was the cleanest day, actually. Surprisingly, Monday was really, really good. Everyone was shorting that supply zone here, right? All these SMC guys were trading that supply, or we're looking to short in that supply or whatever. Shorting here, price comes down, more shorters get involved, price comes back up, more shorters get involved, price comes back up, and then boom, we break above that range. We go long. We understand that most of people's stop losses will be placed there, or buy stops will be activated there. So that's what we target, right? So we enter, stops go there, and then we target that high. That trade we talked about perfectly, actually. We shared that also in our group. That was this one right here. Really, really textbook. We talked about this one before. Right there. We actually talked about it in the video. For the previous GBP right there before we broke out. So, like I said, the moment we are here in this video, I said, you know, there is a chance that we come down. I have no control over the market. Price could come down. Price could simply just not break out. But if it breaks out, if we break above that high and we close above that key level, I will take a long position. So instead of having the mindset of like, I know what's going to happen. I know we're going to go up here. I know we're going to drop now, right now. I know we're going to do this, and then this. I can better say, I understand that I have no control over the outcome. But if this happens, then that aligns perfectly with my setup, my playbook. Then I execute my position for that exact reason. Much more peace this way. Much more peace. Much more relaxation. No more worry. about I'm trying to be right. I'm trying to predict the market right here. And you're probably in a community, or you've probably have been in a community before, where everyone pretends like they know everything about the markets, and they pretend that they know exactly what's going to happen. And they're telling you things like, watch what gold does in the next 5 minutes. It's going to break down and it's going to break the highs. Look, you see I was right. You see I was right. And you think he's a freaking genius. But guess what? The other 9 times that he was wrong, he didn't capitalize on it. All right? He didn't tell you, you see I was right. He actually just stays quiet, and he's like, he hopes that you forget about it. That's the reality. So therefore, don't try to predict the market. Don't try to predict the outcome. We look at macro fundamentals, yes, but we always wait for certain confirmations to happen first. That's the reality. It's scenario mapping. We call this scenario mapping. I actually have written a whole chapter about this. Okay? A whole chapter. Let's see if I can find it for you. It's lower here. The trap of trying to be right. Read this, page number 233. Most traders don't know they're predicting until it's too late. Read this one, okay? The LTA strategy is built for anticipating. Once you understand this, you understand exactly what I mean. And whenever somebody asks the question, do you think gold is going to go up or down? Do you think we're going to be bearish or bullish? Do you think that price will come down in the next 30 minutes? Like, read this and you understand exactly how we think with LTA about that question. Scenario mapping, page number 233 and 237. Read this, you get what I mean. Okay, be right back, G's. Let me get some tea real quick. Thank you, guys. Thank you. Appreciate that. So gold did close above the fixed very high at 36.84. We're now at 36.86. We did see the 30-minute or hourly closure above it, if I'm correct. So therefore, I do see the chance that this could potentially go higher, right? We have seen that closure right now for that particular reason. There is a possibility. However, I do not see a very clear buy setup from this high where I would feel comfortable with taking a long position into this previous range right here. All right, we're dealing with too much resistance from that range and not a lot of volume. Not a lot of volume where I would feel comfortable with looking for a long continuation play. Okay, so if we would draw that range here and we would draw the profile over that range, then you can already see how price responds from that fixed very low level. Okay, so if price wants to break, it has to break through these levels. I do not see very clean entry models around longs here. This is why longs here were the best before the stream, before the news, sorry, before the New York Open. Because you had that pullback here and you had that internal break there. But buying up here for me doesn't allow me to really get my risk to reward right. So this is why we were looking only for sells right there if it will break down, because that will give me the freedom and at least the probability of price continuing lower. But for everyone who was listening right here, do you guys recognize this in yourself? Like, have you guys seen this in a community? I just actually want to know this. Have you guys seen this in a community where people are trying to be right about the market all the time? They're trying to predict the market. They pretend that they know exactly what's going to happen in the next 5-minute, 50-minute, 30-minute candle. And they give you and they sell you that idea that you should be able to understand how the market is gonna move by default at all times. If you recognize that, let me know, please. I'm extremely curious, okay? Because this has, for me personally, be one of the biggest downfalls at the beginning of my journey, where I was just obsessed with trying to be right about the outcome. And if I was wrong, I pretty much threw everything in the bin. I could throw my whole trading day in the bin, pretty much. Okay? And I'm not saying that, like, you know, you cannot take a trade and you cannot, let's say, you know, obviously you need to predict something, right? Because you're anticipating something, but it's more about the certainty that price will go in that direction before. So yeah, be cautious around that, man. Really, really pay attention to, you know, who you're learning from, really. Liam Pepper, my man, you're a G. You're a G. Liam says, I know exactly how it moves. If I enter long, it will simply go down. That's a good point. Yeah, you guys are so freaking funny sometimes, man. I love it. You guys are funny, man. You guys are funny. Okay, guys, to be honest, we're reaching now 11. Okay. Yesterday's trade was a break-even trade. I think I still need to update this, by the way. Did we take a trade on Tuesday? Oh no, sorry, yesterday was Tuesday, right? Monday we had a win. Friday we had a win. Yesterday break even. Today probably no trade, to be honest, based on what I'm seeing now. Unfortunately, guys, I have to disappoint you. But yeah, that it is what it is. It is what it is. So what I'm gonna do, I'm gonna watch a couple of videos right now. Okay, I still want to be here. I still want to stream with you guys. If something magically happens and we break down, I will be there. If you guys want, we can do a couple of analysis right now, real time. We can talk about some history. We can talk about some trades, whatever you want. Let me know in the chat, please. You want me to analyze something for you right now? Amazing. Otherwise, I'm still gonna stream a little bit, and I'm gonna watch some videos here. I'm gonna watch and review some content, some videos here, and we're just gonna do that. All right. It's the Fomc today. In a couple hours from now, we are not obligated to force anything if there is no if there is a setup according to our rules and our things here. All right. So for the people in our group, what you can do, you can drop the videos in the reaction video section here, and we can actually go over and watch a couple of those here today, and you know, analyze some guys here, analyze some other influencers, go over their strategies, whatever the case may be here. We might learn something from it. You know what I mean? One question: if you were already in before the push up, how would you manage it right now? To be honest, I would close. I'm personally, if I would be in right now, I mean, I wouldn't be in because I hadn't had my confirmation. I'll tell you what I would do. I would close the trade myself. That's my personal opinion, because we have seen a closure above the fix for a high. Don't blame me if it comes down, okay? Don't blame me if it comes down and you actually close the position here. But or you simply take the hit and you accept defeat and go and continue next time. There's nothing wrong with that either. Right? As long as your risk management is on point, there's nothing wrong with that either. I have periods where I win 70% of the time. You can see this month, pretty even. August, great month, right? August, I had 2, 4, 6, 8, 10 winning trading days and 4 losing trading days. So there are periods where I have like a 70% win rate where I'm absolutely killing it. Then there are periods where I have like, you know, a 40% win rate. Losing is part of it, right? Accept it. And then if you're in a long position, okay, now I get it. You're in a long. You have to close your buff, right? You have to close your buff. I mean, depending on where you entered exactly, but if you entered below, what is your risk reward ratio? What is your standard? Let's see what this guy says. Who is this?
see online where people pass shit in literally a day, or a mentor says, I'm gonna pass. The reality is the stuff you see online where people pass shit in literally a day, or a mentor says, I'm gonna pass it in a day, I got this, and it shows you that they can do it. you are ultimately not necessarily being scammed, but you are being forced to have a negative psychology on your own trading when it's time for you to do it yourself, which means that over time you do worse. So instead, focus on what actually matters, which is that allow losses and break-even stacks as fuel for the future. The fuel will fuel the ride and let you get to the end no matter what. So by the end, you'll always clear the finish line, you'll always get to new highs, you'll always make money. And if you stop thinking in this super short-term kind of bullshit where it's like, oh god, my last 10 trades have been break-evens or losses, and instead you move yourself to thinking in terms of, hey, as long as my last 10 trades were break-evens and losses, it means that I am doing what I should be doing, I'm not losing an extensive amount, you're gonna make an unbelievable amount of money. The reality is the stuff you see online where people pass shit in literally a day, or a mentor says, I'm gonna pass it in a day, I got this, and it shows you that
It's all about data. This is exactly what he's saying, I guess. If I'm correct, that's exactly what he's saying. It's pretty much all about data. Right? Break-even trades, to me, are part of the game. That's it. That's it. In the meantime, what's gold doing? Gold is pushing up higher, right? So clearly, after that closure above, it's trying to break. It's trying to continue to go higher. So our trade is for sure invalidated right there. Absolutely. Liam Pepper says, next time you guys are looking for a sell, let me know. Then I'll enter a buy W for you guys. Shout out to Liam, man. Shout out to Liam. Exactly. Do that next time. Please do that, my friend. Do that. Do that. Do that. Lorenzo, do you trade while not on the live streams? 100%. Yes, I do. I mean, I have to, man. I can, like, you have to understand that the New York session is only a short-term window of opportunity. London sessions are sometimes really good to trade. For me personally, I live in Bali, so you have to understand that the New York session for me is 8 p.m. 8 p.m. London session is 3 p.m. So for me, the London session is perfectly to trade, right? Perfectly. Asian session is a bit too early. To be honest, I'd rather focus on the gym or whatever. My family, the gym, whatever the case may be here. So usually London session and New York session. So in our group, the guys are usually active. Also same thing, London session and New York session, exactly. Yeah. In the meantime, the dollar, I'm just checking the dollar right now. We're simply in a range. Every currency pretty much is in a range. Euro is in a range. The pound is trying to break out of the range. Yeah, FOMC's in a couple hours. I think it's pretty tricky. The commodities look strong. Gold looked very good. I personally do not see any clean buy setups that I can take right now at the moment. Architect said GJ is about to stop me out. Was there anything wrong with a short on this today that I might have missed? We can check it out. We can check it out. I don't know. I think we talked about this range, right? We're still hovering around the key levels here. Not much. No follow through yet. No, pretty much no movement. I think that right now it's getting a bit too late regardless, right? The FOMC is in like 3 hours. So I just don't see a lot of movement happening right here. But just, I'm always more cautious regardless around the FOMC. Just because you never know when the volume comes down, and then it's just waiting for the FOMC to give you a direction. So anyways, in terms of gold, it's probably going to hover around here for a while. We'll see if there is follow through here, but at closure is definitely not looking bearish anymore, right? Because we now have pretty much this range. We closed back above it. We had this bottoming set here. We closed above it here. We're now going to tap into that resistance. So if you are already in a gold long, I think you absolutely crushed it. If that aligned with your playbook, you're aligned with your setup. But trying to enter a gold long right now, I think it's just getting way too risky right here. Way too risky. Have you seen New Zealand dollar against the yen? New Zealand dollar yen, yeah, it's weak. It's freaking weak. It's weak, very weak. Yes, sir. Okay, guys, I think that's it for me today. I have been looking at potential reversals. Didn't really happen. We just saw that continuation here on gold today. So today for me, probably no trading day, no executions. Overall, slower month for me personally. You know, we're up around 20k. No, it's worth 25k if you calculate the total amount of profits here. It is okay. It's decent. We're on track, especially if you compare it with last month. But it's not wow. It's not wow. Right now at the moment at least. So yeah. This week, I kind of expect the FOMC to be slower. I didn't actually expect any trades regardless today. But it was still worth to check it out anyways. And see what we could do here, all right? The reason why I'm here is to answer your questions regardless. Anything in regards of this book, you know, it's all for free. You can get this one right here. I'm here to help you out. I'm here to answer your questions regardless. Even if there is a day where I don't take any trades personally for myself, I don't see anything clear in the market. I know some guys come here just for the trades, but there are also a lot of guys out there that actually want to learn, actually want to level up. Because if you come for trades quickly, you know, at some point you're going to go from one to another, to another, to another. And yes, you're going to take some trades here and there, but it will not turn you into a long-term, sustainable, profitable trader. You have to do it yourself. If you want to succeed in this game, it is you, and you. Okay? The only thing that I can do here is to trade the way I trade and what I do on a day-to-day basis. Whenever I take a trade, whenever I don't take a trade, at least you see it live. I mean, most of my trades have taken live, if it's during New York session, of course, for sure. So therefore, make sure that you actually be committed. If you are committed, then let me know in the chat if you are committed here, because that means that tomorrow we're going to come back, post the FOMC. And I just hope personally that we're going to see more volume coming into the market again. I think over the next coming, 2 weeks, heading into October, when Q4 starts, I think by default, that's going to be probably the time when the market is getting back on track again. Okay, when the market gets back towards its momentum again, where the regular volume is coming down, when the summer is over, where all these things come to play here. We had an incredible summer so far, but Q4, honestly, Q4 is where it's at. So everything that we're doing today is all a build-up towards the next coming months ahead of us here. And if you take a trade, we take a trade. If you don't take a trade, there is no trade to take for me. And then that's pretty much it. Okay, I hope you learned something today. In regards to the FOMC, I'm going to close up with that here. The dollar right now is at weekly demand. Okay, the dollar is sitting at major weekly, could say weekly support here. We have been waiting for a price to tap into that weekly demand again. And now we're going to deal with the FOMC. So, I mean, don't expect the first move during the FOMC to be the move. All right, we could easily go up. FOMC comes out, we come down, right? This also counts for gold. Gold could easily come up now, push up further, and then boom, come down, right? So always be aware of the FOMC. Always try to trade the aftermath. The more people I see trading the FOMC, the more people usually tend to get wrecked. Just wait for the confirmations. Wait for your setups. And let's get back tomorrow once the FOMC is done. And then we'll see exactly where the dollar is at and where gold is at. And then we know at least that we are not waiting for like a major news event. Okay? Because the FOMC is truly the most important event of the quarter. And then after that, you know, we have, you know, yes, the GDP. We have a couple more things for the dollar that are going to be important. The PC price index. But there is no comparison to this rate cut and Jerome Powell explaining what he wants to do over the next coming months ahead of us here. Everyone is waiting for it, including Mr. Trump. Even Mr. Trump is curious to what Uncle Jerome is going to say tonight or this afternoon here. Okay? So thank you guys for coming on the show today. We're going to be back tomorrow. Looking at setups, looking at the market, but also going over, obviously, our concept, things that we have been doing here. And we're going to repeat this process over and over again. All right? Shout out to you guys. There you go. Not this one, this one. Good luck with the Fomc. Be careful, be cautious. See you tomorrow, 8 a.m. EST. New York session. Hopefully, we have a good outcome here. We have a good outcome. We have a nice confirmation. All right? Peace out. See you guys. Good luck.